Hey, Kyle, what you got for us? Or actually, we have a whole bunch of stuff for you.
We've got a lot of questions
Yeah,
here.
so we got a lot of questions. So let's get straight to it. First question, you ready?
Sure.
What is a DST? This is like we're going Jeopardy style. We're going Jeopardy style. What is a DST?
A DST, well, it could be many things, but what I deal with and specialize in is the Delaware Statutory Trust, that DST. Yeah.
Okay.
And one of the ways I met Adrian was through a DST many years ago.
Kyle, why don't you refresh our memories? Because this answers the next question. Who is a DST for? Maybe you can use, Adrian would be a great live testimonial
Example.
of why this worked for her. Why did it work for her, Kyle?
Yeah, I think when, maybe Adrian can share more about, the why and the personal reasons being behind it. Yet, typically a DST is for someone that is selling a property, normally highly appreciated, and the goal is to defer capital gains tax through a 1031 exchange.
Okay.
And a DST qualifies as like-kind replacement property. So you can sell a property, like a single-family home or apartment, and go into another single-family home or apartment. Or you can look into a DST, which allows you to be a fractional owner in a commercial, institutional-grade property, and then it becomes a passive investment versus one where you may have to be actively involved.
Yeah. Kyle, talk more about the assets that DSTs are invested in. Maybe mention some brands or businesses that people would recognize.
Yeah, so the type of assets that would be in a DST would be office space, self-storage, as Adrian mentioned.
Yeah.
There's student housing, life sciences. What else do we have? There's hospitality as well. And some of the brands could be well-known, like Walmart. Many of the Walmarts used to be in DSTs.
Yeah.
Many Amazon distribution centers are inside of DSTs, and they're owned by people like you and I.
Yes.
They have to be accredited, though. They have to be accredited investors because there are minimums, and there are some very specific risks. But typically, many people that own investment property will normally qualify as an accredited investor.
Yeah,
But you should talk to a financial advisor or a CPA to confirm.
I think that, specifically here in Hawaii, because of our price points, that's how, and then tell us what are those minimum requirements to be considered an accredited investor, Kyle?
Yeah, an accredited investor is someone that has $1 million or more of net worth, excluding their primary residence, or a single individual earning $200,000 or more in income, or a married couple earning $300,000 or more. So, as you mentioned, if you own one investment property worth $1 million, that's not even counting for, you could include your IRAs, your investment account, your bank account, yet just your one property could qualify you as an accredited investor.
Yep. So, and with our price points, it's not too hard to get to there. What's the minimum investment required for a DST?
If you're doing a 1031 exchange, it's $100,000. So you're selling an investment property, you'd have to exchange at least $100,000. Yet people that want to just deposit cash, they could do as low as $25,000.
Okay. And I want to also touch on this whole 1031 exchange. I know that I don't think it's on our list of questions, but we do talk about having just a foolproof way of making sure your 1031 exchange does not fail.
Yeah.
And let's just touch on that because it can be kind of stressful. You're selling your investment property and there's all these rules about identifying and then closing. And maybe you don't find the right home or the right condo or investment, and then you're stuck with a couple days left. So how does the
DST... Well, it's good that you explained it for Kyle to explain it.
But how does the DST come into place, Kyle?
Yeah. So Adrian, what you're talking about is when you're looking to do a 1031 exchange, you sell an investment property, the IRS gives you 45 days to identify an address or addresses and 180 days to close.
Yes.
Yet in a tight market, or maybe you're looking for a specific type of placement property, it might be hard to even get property act in 45 days. And so a Delaware Statutory Trust, we typically always have them in inventory. And so as long as the person can qualify as an accredited and then we have them in inventory, someone could call me on the 45th day. I don't recommend that, but we've had that happen in the past, and we're able to identify a property with an address, and then they can put that down on their identification form, and then we can close easily within 180 days. Typically, we can close in 5 to 10 business days.
And for our listeners that want to find out more about the DST, go to teamlally.com/DST.